Good afternoon, learners. This afternoon we'll be looking at session 7 of SCC 311, and we'll be looking at accounting standards. Now, accounting standards are authoritative statements of how particular items of transactions and events are reflected in financial statement. It's part of a regulatory framework for financial reporting. We had three sources of regulatory framework. We had the company law, we had the accounting standards, and listing rules for listed companies. So we've examined others. So now this session will look at accounting standards. And accounting standards, they are pronouncements, they are authoritative statements that guides the preparation and presentation of accounting information to ensure that information are presented the way that will be relevant and useful to users and will enable them to make economic decisions. Okay, now we're starting with the Dane Nigeria Accounting Standard Board, which was established in 1982 as an independent body which was responsible for the issuance and development of Nigerian accounting standards. Our NAS then developed Statement of Accounting Standards. So these Statement of Accounting Standards were the one that guide the preparation and presentation of accounting information, preparation and presentation of financial statements then. But in June 2011, the Financial Reporting Council of Nigeria, FRCN, repealed the Nigeria Accounting Standard Board. So this Financial Reporting Council of Nigeria is a federal government parastatal under the supervision of Federal Ministry of Industry, Trade and Investment. And this body has several objectives as defined in the Act, Financial Reporting Council Act. And these objectives include to protect investors and other stakeholders' interests. The users are the recipients of accounting information, and are the ones that they are the end users of accounting information. And every accounting information should ensure that the interests of these users are protected. So the aim of Financial Reporting Council of Nigeria is to protect the interest, to ensure that information provided by organizations are the ones that will be useful to these users and will enable them to make economic decisions. Also, this Financial Reporting Council of Nigeria, they give guidance on issues related to financial reporting and corporate governance, and they ensure accuracy and reliability of financial reports. They ensure that financial reports provide information that are relevant, they are accurate, and they are reliable. Then also this this Financial Reporting Council of Nigeria was responsible for harmonizing activities of relevant professional and regulatory bodies. Like our transition from Nigeria GAAP to IFRS was supervised by this body, Financial Reporting Council of Nigeria. They oversee the harmonization of accounting, our formal GAAP, our Statement of Accounting Standard, with International Financial Reporting Council, with a motive of ensuring comparability, enhancing the credibility of financial reporting in Nigeria. Okay, like I said, the FRCN oversee the convergence of Nigerian GAAP to IFRS, and they made a roadmap as to the adoption of IFRS in Nigeria, such that significant public entities, especially quoted companies, they adopted the full IFRS in periods ending after 1st of January 2012. Then other public entities, they adopted the full IFRS 1st of January 2013. Then small and medium-sized entities, they adopted the IFRS for SMEs in January 2014. Okay, now the Nigerian Accounting Standard now have been replaced by International Financial Reporting Standard. We no longer hear about SAS, one SAS, that and that. Now we are in the era of IFRS, International Financial Reporting Standards. Now let's discuss how do we come about IFRS. There's this body called International Accounting Standard Committee, IASC, which was established in 1973. not a Nigerian, it is an international body. It was established in 1973 and it developed international accounting standards. What with a particular aim of harmonizing accounting procedures throughout the world, such that the financial statement in Nigeria will be the same as that produced in Ghana, so that investors all over the world can compare, can make economic decision based on the financial statement. So that was the motive of International Accounting Standard Committee, and that was why they developed International Accounting Standards with the aim of harmonizing accounting procedures throughout the world. And they developed several IAS, International Accounting Standards, and we also have standing interpretation committees that developed SITs. Okay, but this IASC, like I said, was established in 1973, and they developed their first set of IAS in 1975. But when we got to but at the time, IASB took over from IASC. IASB now took over from IASC. They took over all the standards that IASB is International Accounting Standard Board, which took over the standard that IASC had developed, and they also developed new standards, which were called IFRS. Okay, so now we call all these standard IFRS. IFRS consists of IAS, SIC, which were developed by IASC, then also IFRS and IFRIC. So these four standards altogether, they are called IFRS. Now these IASB, they had 3 objectives. I say IASB now, International Accounting Standard Board, they took over from International Accounting Standard Committee. So these IASB have 3 objectives. Number 1, to develop in the public interest a simple set of high quality, understandable and enforceable global accounting standards, which will help participants in the various markets and other users to make economic decisions. So they develop in the public interest high quality accounting standard that will lead to high quality financial statements, which will help users to make economic decisions. Then number 2, they promote the use and vigorous application of this standard. Then number 3, they work actively with national standard setters like FRCN in Nigeria to bring about convergence of national accounting standard and IFRS to high quality solution. And we have several of these IAS. We have IAS 1 to 40, then we have IFRS 1 to 15, we have IFRIC, we have SIC. These are the standards, the accounting standards, and their aim is to ensure that financial information provided to users are such that are relevant, they are reliable, they are understandable. We see these are the qualitative characteristics of a financial statement. We have two qualitative characteristics. We have the fundamental and the enhancing. The fundamental characteristics include relevance. Information is relevant if it can make a difference in the decision of users. If it is useful, that users can rely on it and make decisions. Then we also have faithful representation, that is, information provided should faithfully represent what it's proposed to represent. If you're saying the income, the profit for the year is 3 million, it should be indeed 3 million. It should be free from error, free from bias, and it should be complete. That's under the fundamental quality characteristics. Then we have the enhancing characteristics, which include comparability, understandability, verifiability, and timeliness. See, all these ensure that financial information provided are relevant, are useful, that users can rely upon them to make their economic decisions. So accounting standards is part of the regulatory authority, regulatory framework that guides financial reporting. And financial reporting is communicating accounting information to users so that users can use it in making economic decisions. So we have come to the end of this lecture now, so please go through this and go through the other materials. Thank you.